Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about cars. We're going to talk about the auto industry. Who wants to buy an awesome used car, your dream car, the car you've wanted for so long and you've been waiting patiently for this market to crash? Now it already has. Meacham auctions came out the other day and, Meacham, back up. They came out the other day and talked about how drastically the prices fell off a cliff in the month of September. I know we're going to get some more amazing news here about October soon, but we're also, as a Mannheim, Meacham, Mannheim, Mannheim. That's what we're talking about. These, there's more and more stuff happening in the auto industry. I'm waiting with bated breath. I have a list of dream cars myself. Guys, put in the comment section what your dream car is. I want to see and hear. I love reading about your dream cars because there's nothing better than having that fine automobile right there in the grasp of your hands and feeling all those horsepowers, or maybe electric power if you're into that kind of thing. Just cruising down the road, the sound and the hum of the engine, the feeling, the vibration. I absolutely love it. Okay, we're going to dive into the story. New car loan rates set to hit 14-year highs as affordability crisis worsens. That's just awesome. We've been talking about this in real estate. If you haven't checked out the Real Estate Ninja, he's all right, I guess. Good looking dude, though. Go check out that channel because there's a lot of real estate news over there because real estate's crashing because interest rates are going up. Guess what? Same thing's happening in the auto industry. So not only do you have dealers having to drop their prices and stop those just insanely stupid cost over MSRP. I went into a Corvette dealer, I think I told you the other day, and they wanted $40,000 to $50,000 over MSRP. I said, you are high. And they went, no, it just sold. I'm like, well, then you're high. And the guy that bought it last night is high because I just went to the Chevy dealer down the street and they're selling them for MSRP. So you guys are both high. I hope you enjoy that. So it says right here, the auto interest rates are rising. They've hit the highest since 2019 and will soon jump to 14-year highs. That is quite a jump, my friends. New data from Edmunds showed the average annual percentage rate on new car loans was 6.3% in October, the highest since April 2019, according to Bloomberg. The Federal Reserve is expected to raise interest rates Wednesday again by 75 basis points. Now you're going, Ninja, that is old news. Obviously, you're reading an old news thing. I get it. It's true, but it's very relevant today, and you'll see why for a second. So they were expected to raise 75 basis points, like the story says, and they did. For the fourth straight meeting in an unprecedented move, the most since the early 1980s to quell rampant inflation. Now, just, little side note, they don't want to quell inflation at all. They actually want it to crash the economy and take all of your stuff. That's really the plan. And I'm going to keep harping on that because it's just the truth, okay? That's just the truth. I know it sounds crazy, but, you could crap in one hand, hope in the other, and see which one fills up faster, if you know what I mean. The fact of the matter is they do not want to get on top of it. All right. If they did in last December, and they said, we've decided we're going to start raising rates, we're going to get on top of that inflation. That's what Jerome Powell said, and he said it just like that. You know what I'm saying? And he goes, we're going to do it about 4 months from now. We'll start then, because we got to let this thing get red hot before we really jump on it. They're not doing crap to do it, okay? If they had to get on top of it right away, they'd be like Paul Volcker and spike rates. But they know they want to slowly crash this economy so you don't realize what's happening. But you know because you're watching the Economic Ninja channel. So they did raise it, right? And it says, this means the federal funds rate will have a new range of between 3.5% and 4%, the highest level since 2007. Oh, isn't that when the last economy crash happened? It was not a recession. It was the Great Recession. Okay, copy. So it's weird, parallels. It says right here, since APRs for new vehicles track the Fed funds rate, expected to hit highs not seen since early 2009 in the near term. Now, here's the problem. A little caveat here. I'm going to digress. The Federal Reserve has made it very clear. We're going to 5%. And then we may go beyond that. We might pull a Lightyear, Buzz Lightyear, to infinity and beyond. We're really going to shove it up your tailpipe. We're going to shove the reality of higher interest rates up your tailpipe. And just like how real estate sales are collapsing, so are auto loans. See, the thing is that most Americans do not have the money to pay cash for a car. And we need to get you guys into that mode, that if you're buying a car, you're paying cash, all right? If you own your car cash right now, that is freaking awesome, and congratulations, because you are literally head and shoulders above the majority of people. And now what I want you to do is pretend you have a car payment and just put that money away. Just pretend you got it and put it away. Why? Because amazing deals are coming right now. We're going to take advantage of them. I'm going to have a whole museum of cars, but not before I get this high-end tricycle. All right. It says new inventory, vehicle inventory might finally be improving, but the automobile industry is still on a long road to recovery. No, it's not. It's going to crash. It is going to crash and burn, and we are going to enjoy this, all right? Because, guys, honestly, a good old economic collapse should be fun. And I want you guys in a position to be able to enjoy this. Grab your popcorn, sit back. Yep, I'm going to buy that. I'm going to buy that. Oh, wait. Why not? I'll buy that too. That's where I want you guys, okay? It says, and I know I'm going to get one comment. I can't believe that you just enjoy the downfall of others. I'm trying to wake them all up. Sounds like it's not working for you, but I'm trying to wake everybody up. And so through sarcasm, which is the lowest form of humor, but that's what I've got, so I'm going to roll with it, and an amazing hairdo, I'm going to try and warn the world to get ready, get prepared, and not scared. But most of them are just going to roll their eyes at you and call you a conspiracy theorist. I know. I get that all the time. It says right here, Caldwell noted. Who cares who that is? Well, no, I'm joking. He's the executive director this is a good title. The executive director of Insights for Edmunds. It's like, who applies for that job? I want to be the executive. I want to be full of insights. Like, well, do you have insights? Well, I'm quite insightful. Well, give us an insight. The car market is as strong as ever and will continue to get stronger. Well, you have tickled our ears. You are hired. I want that job. He's the director of insights for Edmunds. And this is what he said in an email. Many customers who have been sitting out of the market due to high prices and limited options will likely continue to do so over the high interest rates. Man, that's some brilliant talk. You definitely do not deserve that job. It says new high car prices remain stubbornly high. Edmunds data shows the average new vehicle purchase last month was $40,438. Now, this is very easy to explain. The high price in cars has nothing to do with demand. See, demand's gone. Poof, gone. People are like, wait a minute, what do you mean I can't qualify for that loan? Whoa, wait, what do you mean I can't pay that $1,000 a month payment? I totally could do it. Government, can you give me some more stimmy money? Just need another stimmy. Give me stimmies. Just give them. I can't qualify? Okay, well then I'm not going to buy a car. And so the facts are those car companies like Carvana and all these other car companies, they paid too much for the car. They didn't see the writing on the wall. They weren't following the economic ninja. I don't know what to tell them. You know, I'm more than just a dude with a brohawk and a dream. There is a side little plan going on here. So they paid too much. So now they're in this world, this sort of realm called denial. And it is way more than a river in Egypt, let me tell you what. And they're sitting back going, well, crap, we're screwed. But we can't take a markdown on this because if we do, it's going to show bad things to our shareholders. These write-downs, bad. Write-downs, bad. Profits, good. Well, the problem is they don't have the profits. They're going to have to take the write-downs pretty soon. And like we're already seeing with these auction houses, they are starting to slash their prices drastically. However, not everybody is slashing their prices. There are some stubborn holdouts. CarMax. So at a certain point, they're going to join the forces too, and it's going to be a deluge of selling and marking down prices. As a matter of fact, you're probably going to have a hard time finding a red Sharpie in any Staples or OfficeMax stores. Wait a minute. I think OfficeMax is completely closed. Yeah, that's right. Our economy's crashing. In Staples or Walmart, because they're going to be spending so much time marking down these prices. Sorry, I digress. The fact of the matter is, as the interest rates, the Fed funds rate keeps rising, you are going to see more and more auto dealers starting to have some very serious problems. Already, they're having a hard time selling their paper. Paper meaning lots of loans bundled together, okay? They're having a hard time selling them because a lot of those assets are distressed and a lot of people identifying that paper, they look at that paper and analyze it and go, I don't think most of your customers that have those loans are going to be able to pay their car bills pretty soon. Why? Because they're going to see their auto prices falling and they're going to walk away like they did in 2008. And then they're going to turn around and go, they don't have enough money now because of inflation. Yeah, their electricity and food bills getting a little bit more expensive. Guys, this is getting crazy. Get ready. Buckle up. Save your money. Trust me, I saw Shelby Cobra the other day. It was a remake, but it was beautiful. $30,000. I'm like, Those things have been $45,000, $50,000 all year long. Down 30 grand, and literally in the ad it said, I have to sell ASAP, probably because he needs to make his mortgage payment. Guys, this is getting serious. Let's get ready. This is not the time to pounce. This is time to get excited. Get ready, save your money, get into an inflation hedge, and hold on tight. Let's do this. The Economic Ninja is out.